This is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my European opening market comment for Thursday, October 13th. Well, the dollar is holding onto its gains as U.S. interest rates rise. Yesterday's minutes from the September FOMC meeting showed that the decision not to raise rates was a close call, and that several members said they saw a rate rise relatively soon. Chair Yellen's view apparently made the difference. Watch for her comments on Friday when she delivers a speech. That'll be a big risk event for the market. The yen strengthened after China's trade figures for September, which were out overnight, showed a collapse in exports. Imports also fell unexpectedly. China's yuan weakened and the yen strengthened. Now, sterling over the last few days plunged, then recovered, then weakened again. It plunged late Tuesday on fears of a hard Brexit, then recovered Wednesday after UK Prime Minister May said that Parliament would get a chance to debate the Brexit conditions. But the rally faded as Bank of England officials said they expect the Monetary Policy Committee to ignore the effects of sterling weakness on inflation. That means low interest rates indefinitely in Britain. The UK High Court meets today and on Monday to consider whether the government can actually trigger talks on leaving the EU without Parliament passing an act. And oil prices fell as U.S. inventories rose 2.7 million barrels in the latest week, according to the American Petroleum Institute. OPEC squabbles over how to distribute quotas are also depressing the oil price. As for today's indicators, it's an exceptionally quiet day today. The only statistics due out during the European and U.S. trading time are the usual weekly data, the initial jobless claims and the weekly oil inventory data, which are being released on Thursday instead of Wednesday because of the holiday in the U.S. on Monday. Now, initial jobless claims are expected to remain at around the recent record low level. That should help to confirm the solid employment picture and therefore could be good for the dollar. The weekly U.S. Department of Energy oil inventory figures are expected to show a bounce back in crude oil inventories of about 1.75 million barrels during the week. That would offset more than half the previous week's downturn. That increase, though, is less than the API reported, so it could in fact turn out to be bullish for oil prices. And then overnight, China will release its consumer price index, its CPI, and its producer price index, the PPI. The CPI is expected to show rising inflation, while the PPI is forecast to show decreasing deflationary pressures. So both should be greeted warmly by the markets as signs of improving health in the Chinese economy, and therefore be good for the renminbi, for the Australian dollar, and risk assets in general. There won't be a North American market comment today. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.